And good morning, everyone, and thank you for joining me for this PICPA legislative update webinar for the third quarter of the 2025 legislative session. I'm Peter Calcara, Vice President of Government Relations, and I appreciate you spending 50 minutes of your hopefully beautiful Tuesday morning, wherever you are, to talk about Harrisburg, the General Assembly, what's happening, what's not happening, and give you kind of an update on where things stand with the budget and our legislative agenda and some other issues. And let me just start out by easing any suspense or preempt any suspense you have about what has happened legislatively. Harrisburg has essentially been a ghost town for the past 3 months. Probably not a surprise. There has been pockets of activity, particularly in the State House. The State House has been in throughout the last few months, working on different issues, trying to kind of push the budget forward. But next week, both the House and Senate are scheduled to be in session, and that will be the first time both chambers have actually been in session simultaneously since the end of June. So I think that may give you kind of a 30,000 view of what Harrisburg has been like for the last 3 months. This is my 38th budget season, and the one thing that I've come to really understand about the legislative process, and particularly when it comes to a state budget and the negotiations involving the surrounding state budget, is to expect the unexpected. Things are never going to go as you expected or as you had planned. So Pennsylvania, budget stalemates seem to be part of our legislative political DNA, unfortunately, for maybe some reasons that I'll talk about shortly. But Pennsylvania continues to operate without a state budget for the 25-26 fiscal year, which began on July 1. So we're essentially a quarter of way into it without a state budget. Part of that, the cause of that is there's no immediacy or immediate pain to not having a budget. The courts a few years ago ruled that the state must continue operations, meaning employees continue to get paid even without a state budget. And kind of that pressure point where I recall the days when there were marches through the Capitol saying pass the budget. That's really all gone now until school districts and human services organizations later in the fall aren't receiving their payments from the Commonwealth. So that the pain points are not there, unfortunately, until later. This year's budget impasse, there are really three major stakeholders in the discussions. Of course, Governor Josh Shapiro, the House Democratic Caucus with its 102-member majority, and the Senate Republican Caucus with its 27-member majority caucus. Those are really the three major players in this discussion. Not to diminish the Senate Democratic Caucus or the House Republican Caucus. They obviously have a voice, but those three caucuses or groups that I just mentioned, stakeholders that I mentioned, really are at the negotiating table per se and trying to hammer out a deal. So here are the topics of discussion for today. I want to walk through an early success that we had, and then talk a little bit more about the budget, our legislative agenda, bring you up to speed on that, making some progress on that, but because of kind of the impasse over the last 3 months, really nothing is really seriously moving. I'm going to talk about some other tax proposals that I stay still on the table, but some are more are trending stronger than others. Give me an update on regulations and judicial elections. November 4th, another election coming up, and happy to take your questions if we have time after the presentation. So let's start with some positive news, some good news. The passage of Senate Bill 719, which is now Act 27 of 2025. I want to take the opportunity to thank everyone who made a phone call, sent an email, sent a letter or a text to their state legislators, state House member or state senator, asking them to support Senate Bill 19. It showed really the bipartisan success that we had really showed, I think, the strength of PICPA's advocacy efforts organization-wide, not only what we do here in Harrisburg, but what you, our members back in this district. We would not be as successful. Our efforts to enact Senate Bill 719 would not have been so impressive, I guess is a good term, without what you did in the district. So I want to thank you for that. Made our job a lot easier throughout the process. When members are hearing that this is a priority, they listen. And I think that's a takeaway for everyone, is that when we are working together and when members or legislators are hearing from our members back home, and it's a consistent message from what they hear from us, it's a powerful influence. So we modernized our CPA law while maintaining that critical component of automatic mobility. And it also demonstrated PICPA's leadership, not only here in Pennsylvania, but nationally. Jen Kreider, PICPA's executive CEO, is really a national thought leader for the profession. And Jen's not afraid to stick her nose into issues on a national level. And she's a voice for the profession, not only Pennsylvania CPAs, but nationally for the profession with the national groups. And also want to take the opportunity to thank our key legislative sponsors. Without them, we would not have been successful. So Senator Scott Hutchinson, Senator Nick Piscatano, Representative Ben Sanchez, and of course, Representative Keith Greiner, the only actively licensed CPA in the General Assembly. So a shout out to them. They made our efforts incredibly successful. This is what I like to call the iceberg slide. So everything you see on this slide represents about 20% of the effort to enact Senate Bill 719. The other 80% is kind of below the line, below the waterline, stuff that you don't see publicly. You know, the countless meetings with legislators, our sponsors, with staff, licensure committee staff, with the BPOA, Bureau of Professional Occupational Affairs, Department of State, with other stakeholders to kind of let them know what was happening, and drafting meetings, you know, trying to put pen to paper and making these changes, which is somewhat of a challenge because our law, the CPA law, dates back to 1947. So we're kind of trying to amend that law every time we amend it, and it's becoming more and more challenging. So this is what you see, and you know, kudos to everyone again. 16 legislative days from start to finish, from May 6th to June 30th, when the governor signed it, 16 legislative days. So whoever says that the General Assembly can't do anything quickly, remind them of this. Act 27, Senate Bill 719 went through in 16 legislative days, session days, which is kind of unprecedented, particularly for a licensing bill. Licensing bills are usually very deliberately moved through the legislative process. And this, again, you know, to everyone who had a handle on this, thank you. Real quickly, and I know this is somewhat repetitive for many of you, but want to just cover this real quickly. The four key changes now add a bachelor's degree pathway plus 2 years of experience to the law. We're keeping the 150 hours and the master's degree, but adding back the bachelor's degree pathway. Automatic mobility, that was critical. We heard you loud and clear. We need relief through the bachelor's degree, but don't mess with the automatic mobility. So we retain that, which is obviously critical. The 30-month window, examination window extension, we were, I think, the last state to move from 18 to 30. This typically would be a regulatory change, but we just felt this, and the reference letter could be a regulatory change. But we just felt more confident that we could get the legislation through before the regs, and proven to be right. So the 30-month examination window, and the benefit of that is BPOA, the Bureau of Professional Occupational Affairs, has said that provision is retroactive. So if it applies retroactively to June 30th of 2025, which is I think a real positive. All these changes are effective immediately, June 30th of 2025. So while we were not the first to pass our law, I believe we were first to have the pathway and automatic mobility signed into law. So The automatic mobility, there are safeguards built around that. Anybody coming into the state has to have a current license, have passed the CPA exam, have earned a bachelor's degree plus 2 years of experience, or the master's, or 150 hours plus 1 year experience. So there are safeguards built around that. And lastly, again, still, it's just showing you the third pathway. I think I believe there are 25 states now that have enacted the bachelor's degree pathway. And I know there's some, criticism, I get it, about, we're just going back to where we were probably 10 or 12 years ago. And Pennsylvania was one of the last states to enact the 150-hour rule. And you can thank Representative John Marr for that. Representative Marr was not a fan of it, but he certainly came around to it. I think one of the benefits of the 150-hour, keep this in mind, is it gave us substantial equivalency, which gave the profession mobility. And the mobility, the driver's license type mobility that the CPA profession has is unlike any other profession. Nurses don't have it. Doctors don't have it. Attorneys don't have it. So your ability to practice in other states is really unprecedented and very unique. And it's something that obviously we guard very carefully. So getting on to the exciting news. 92 days without a state budget. Pennsylvania, I believe, along with Michigan, I know Michigan has, I read yesterday, Michigan maybe has passed, Michigan House has passed a tax bill, but Michigan and Pennsylvania are the last two states without a budget. I hate to, I don't want to be a doomsdayer, or doomsayer, but this is the literally the 10th anniversary of the fiscal year 25-26 state budget impasse. For Governor Tom Wolf was in office, his first budget, which is the longest budget impasse in my, again, 38 seasons of seeing budgets. You recall that budget wasn't passed until March of 2016. Governor Wolf was giving his 16-17 budget address in February without having passed a budget for the previous fiscal year. So I'm not saying that this is going to play out that way. But just keep in mind that this is the anniversary. So we're continuing to operate without a full budget. There was some hope a few weeks ago once the short-term resolution the transportation mass transit funding issue was kind of taken off the table by Governor Shapiro, that it could lead to an agreement. But still no agreement, still no decision over the top line spend number, which I'll talk about in a little bit. Most recently, just last week, State Treasurer Stacey Garrity announced her office will provide $500 million in short-term loans to county governments and Head Start programs. This is funding is intended to help counties continue providing essential services like mental health support, disability care, and other childhood education programs. Temporary fix, but the key for kind of PICPA throughout this process is once you see a budget and the related bills implementing the budget, tax bill and administrative code bill, education, public school code bill, that's too late to effectuate any kind of change. So we've been trying to use the last 3 months to kind of quietly but efficiently making legislators know of some of the issues that are on our radar to make sure that, when these things are negotiated, they're at least on the table for discussion purposes. So we've been trying to use this quiet time, I'll call it, for that purposes, to kind of keep our issues in front of legislators as they move through the budget process. I think this shot kind of summarizes kind of the budget debate in Pennsylvania right now. So as I said, we still have not agreed to a top line spend number. What is the total spend for the Commonwealth for the 25-26 fiscal year? Governor proposed almost a $52 billion spending plan, but no agreement on bottom line. And part of that is because you can see in this slide from the Independent Fiscal Office, IFO, which shows general revenues over the course of the last fiscal year and the current fiscal year. You can see it's flat growth around 46.4 $billion in projected revenue. Now that's IFO's projection, but you can see the fiscal restraints, the reality of fiscal restraints are really kind of driving this negotiation. In addition, in September, the Independent Fiscal Office issued a budget brief, and they forecasted revenues of $46.4 billion. It would be flat, but they also made some adjustments because of the One Big Beautiful Bill, or OB3, as some are calling it. IFO reduced its fiscal year 25-26 official revenue estimates by about $625 million because of the research and experimentation expense deduction that's part of HR 1. So that's obviously a big impact, potentially big impact. And one of the issues that the General Assembly is kind of discussing, should we decouple from the Internal Revenue Code for this provision or not? So that's part of the discussion process. The other thing I want to just kind of note real quickly is the refunds. You can see in last year, refunds were particularly higher than normal. I reached out to IFO, kind of like what was going on here, and their response was their best estimate or their best guess is that there was an unusual pattern in June and July of 2024 that effectively pushed refunds out of that 23-24 fiscal year into the 24-25 fiscal year. So some unusual event. They also think maybe the higher tax credits may have had some impact on refunds, but some unusual pattern, as IFO is calling it, caused refunds to kind of jump last year. You can see they dropped down significantly this year. The outlook beyond the next few years is also really not good. IFO's 5-year projects deficit spending, a structural deficit, if you will, for the next several budget cycles. So where are we today? As I mentioned, the starting point, Governor Shapiro proposed a $51.5 to $51.6 billion spending plan in February. The House countered with a $50.6 billion plan in July. And the Senate countered by basically saying, no, we're basically going to do a flat year budget at $47.6 billion. And that passed in August of this year. As I mentioned at the beginning, there are 3 major stakeholders in this, the Senate Republicans, House Democrats, and Shapiro. What does each want in a budget? As you can see there, kind of the sticking points. The overall sticking point number one is the overall spending, and that's key for the Senate Republican caucus. They want as low a overall spend as they can possibly get. And they also want relief from some of the environmental initiatives that are coming out of the Shapiro administration. That's kind of what their top priorities seem to be. House Democrats, they lost their top priority. Public transportation funding was it for them. Keep in mind that a majority of their members are from the Southeast and from the Pittsburgh, which have large public transportation systems. They lost that when that transportation funding initiative, when Governor Shapiro took it off the table. So what do they want now? Education funding is clearly a top priority for them. How much are they going to continue to spend in education? And we're hearing about cyber charter reform as well. And for the governor wants a budget that is but he wants one that's properly funding education and a lot of the other programs that help the disadvantage of the Commonwealth. Kind of the top line priorities for the kind of the key stakeholders as well. Again, I'm not discounting the Senate Democratic Caucus or the House Republican Caucus. They obviously have a significant voice in the process, particularly when the margin in the House is 102 to 101. Let's look at Governor Shapiro's proposed tax and revenue modification. I want to revisit this because, quite frankly, these are still in play. All these issues are in play until we see a budget and we know that they're not in play. Adult use cannabis, the governor is proposing a 20% tax on the wholesale price of the product, which will be sold through a regulatory facility or regulatory framework. This, according to the governor's projection, would generate about $536 million in the first full fiscal year that it's implemented. This is interesting. There's a lot of support for this initiative, particularly from the financial standpoint, but there's also a lot of opposition. I think this still has a lot of hurdles to overcome before we see it enacted in law in Pennsylvania. Video gaming terminal tax. Governor is proposing to expand the VGT tax to include gaming machines that involve, and I laugh, involve an element of skill. I've never played these games. I do not know what the skill level is. I thought it's just a matter of pressing a button, but I may be wrong. These games, they are ubiquitous. They are all over the place. They are in your VFWs, your local clubs, your local convenience stores. They're all over the place, and they're unregulated. So they're bringing in a lot of money for these organizations. Governor wants to regulate them and tax them. They are currently not regulated. So the money is out there, and it's going to these organizations. The governor is proposing a $52 gross terminal revenue tax, and that's the same level as casinos play. Casinos are saying, if you're going to get into our space, you have to be taxed the same way as we are. These VGT organizations are saying, no, we don't have to. We're not regulated. The courts have said we're not regulated. Why would we agree to a 52% tax on our product? So that's kind of the battle. This is the one of the few issues that I've seen over the course of, again, my 38 years in Harrisburg, that has divided the Senate Republican caucus. They have pro-VGT group members, they have pro-casino members, and they have other members that are kind of in between. This has really divided the caucus. I think this may stand a better chance of making it into the final budget. It generates a fair number of revenue. The governor is estimating that it could bring in, if the estimates are accurate, $370 million in the first fiscal year that it's in play. Corporate tax reform. Governor proposed accelerating the CNI, the corporate net income tax rate deduction, accelerating it by 0.25% over the next couple of years. The rate reduction is already in statute, so any change in that rate would have to be part of a legislative package. I know there's kind of rumblings where they're going to delay, kind of like they did the capital stock and franchise tax, delay the phase down. But to make any change, they would have to pass legislation. So the governor is proposing that a 0.25% more on top of what's already in law, so that the rate gets to 4.99% by 2029, which is, I think, 2 years ahead of what's scheduled now. To pay for this rate, the accelerated rate decrease, the governor is calling for combined reporting. Combined reporting has been around since the Rendell days, so 25 plus years ago. Pennsylvania, for corporate tax purposes, a separate company reporting state under combined reporting, which is the reporting system in, I think, 27 other states that have a corporate net income tax. Combined reporting is the common ownership pulled together and report to the state. Those changes combined, so the accelerated CNI rate decrease and combined reporting, would generate another $260+ million for the Commonwealth, according to the Shapiro administration. And lastly, the financial institutions tax. Governor Shapiro proposed the elimination of 3 taxes for banks: the bank and trust company shares tax, the mutual thrift institution tax, and the private banks tax. He's proposing to eliminate all 3 and have banks then pay the corporate net income tax. That has not gone over well from my understanding, but that's out there and it's still part of the discussion. Governor also proposed an increase in the minimum wage from $7.25 to $15 an hour for non-tipped workers, and $9 an hour for non-tip, $15 for non-tipped workers, and $9 for tipped workers. What's not on here, I didn't include, is the public transportation fund, the proposal that the governor made that he has taken off the table for at least the next 2 years. This would provide an additional 1.75% sales and use tax, or would transfer another 1.75% in sales and use tax to the public transportation trust fund to fund transportation systems throughout the Commonwealth. The deal was the governor and Septa, the Southeast Pennsylvania Transportation Authority, and the other transportation authority are going to use different operating funds, I believe, to get through at least the next 2 years. So that issue is off the table as of now. Wanted to talk real briefly about House Bill 1610, championed by Representative Liz Fiedler from the Philadelphia area, and wanted to just put this out there because it's a bill that's already passed the state house. It's already passed one chamber, so that means it's a serious bill. And not that they're not all serious, but once you get a vote and it passes, that's pretty. It has to be on your radar. And I also want to talk to you about it because it includes a number of the governor's tax proposals. One, it includes the C&I rate reduction and combined reporting. It also includes the elimination of tips from personal income tax, exempts tips and gratuities from state PIT, personal income tax. Also establishes a new personal income tax deduction for overtime wages. There are separate bills for that, and I'll mention those in a minute. Those are two of the provisions. Also, it also create another tax credit. I know with the last 10 years or so, the number of tax credit programs have skyrocketed in the tax code. But this Working Pennsylvanians tax credit, it's a refundable PIT, personal income tax credit, equal to 30% of the federal EIT tax credit program. So a new Working Pennsylvania tax credit program. And the personal income tax resident credit provision. And that's something that PICPA has been has been championing for a number of years. And this is kind of I say it's a byproduct of the state and local tax workaround. But the legislation or the language would expands the resident tax credit, Pennsylvania resident tax credit for taxes paid to other state by Pennsylvania residents paid to other states to include all pass-through entities, not just S corporations. So right now, Pennsylvania partners and partnerships cannot take the deduction, but Pennsylvania S corp shareholders can. So we're trying to fix that. I think it's important that now we have at least two of the caucuses, probably at least, I think all four of them support this. But having one chamber pass it fully, I think is a real positive development for us, and I think it's good news. Again, it's a matter of as the tax table negotiates a tax bill, we need to keep that on the tax table as long as possible. Now, one new issue, relatively new, I guess, is state implementation of OBBB, HR1, or OB3, as some are calling it. And in particular, Section 174 of the Internal Revenue Code, it's the research and experimentation expense deduction. So HR1, OB3 allows firms to immediately deduct domestic research and experimentation expenditures and allows businesses to claim any unused deductions related to expenditures made in tax years 22 to 2024. Prior law required firms to amortize these expenses over a 5-year period beginning in 2022. The independent fiscal offices I've mentioned before has indicated that because Pennsylvania, for corporate tax purposes, largely conforms to federal law, this change is expected to reduce fiscal year 25-26 corporate tax revenues by over 600 million. I've seen 600, I think 625. And it's also expected to increase refunds by about 50 million, according to IFO. So a lot of this does not impact PIT, personal income taxpayers. It's a corporate tax issue. The talk in the Hill is, do we decouple? I know some states that also conform to the federal have decoupled. So this is something that we're monitoring closely. We've had discussions with lawmakers on the potential impact. So it's something that is out there that we're keeping an eye on. And also, what impact is the federal shutdown likely tonight going to have overall in the budget deliberations? Still unknown, but it is certainly going to have some type of impact. So that's where we stand with the state budget. We're going to move into, as I said, House and Senate return to session next week combined. Our rumors, swirling around the Capitol is that there have not been any fruitful discussions of the key stakeholders, in quite some time, which is obviously disappointing. But that certainly could change. But nothing until we hear that top line. Once the top line comes, then I think other things can fall into place pretty quickly. So this looks like it could go. I'm optimistic that we could see something by the end of the year. How's that? But certainly we are monitoring activity and we'll keep members apprised of developments, particularly with regard to some of these tax changes, particularly with regard to the decoupling, just so that you have up-to-date real-time information as soon as we have it. Let's move on to our kind of update on our legislative agenda. I mentioned the resident partner credit fix that has been found, that is included in House Bill 1610. It's also included in Senate Bill 253, which has already passed the Senate Finance Committee, but not the full Senate. And Representative Keith Greiner has his own bill, House Bill 1471. So we have all the bases covered there. Again, that's trending in a positive direction. But anything can happen, as we learned last year. Anything can happen at the last minute when it comes to the tax table. The optional entity level state and local tax workaround, we have two bills there, Senate Bill 396 and House Bill 1703, again by Representative Greiner. I quite frankly don't expect to see much activity on this until we see the level ratchet back down to the $10,000 level. There's opposition from the administration on this, so it's something that we keep pushing, and quite frankly, we're the only group that's pushing for it. So I think we're going to have to put this on the back burner until the dynamics are better for that legislation. Raising the threshold under the charitable purposes, raising the thresholds under the charitable purposes law, not budget related, but House Bill 965 by Representatives Salisbury and Greiner. We're also introducing a companion bill in the Senate by Senators Linda Culver and Nick Piscatano, kind of giving us some more options. This is one that we look at probably hopefully a 2026 activity in 2026. Small taxpayer administrative reform. These are bills drafted by our state tax steering committee. Shout out to them and thank you for all the work that they do. And these seek to improve fairness and consistency in how local and state taxing authorities handle requests for relief from interest and penalties from taxpayers. House Bill 855, and both of these bills are sponsored by Representative Joe Webster. House Bill 855 would empower all local taxing authorities to grant abatement of interest and penalties when taxpayers demonstrate good faith, a lack of negligence, and no intent to defraud. Bill is in the House Finance Committee, and House Bill 856 would give the Department of Revenue greater flexibility to compromise claims, extend filing deadlines for petitions, and provide more detailed notice of assessment. That bill we were hoping to go to finance, but was inadvertently referred to the local government committee. We need to get that. We were working with the House Finance Committee on this legislation. So that, again, I think is likely a 2026 initiative. And lastly, the advisory opinion by Representative Keith Greiner would allow the Department of State Bureau of Professional Occupational Affairs to give licensees advisory opinions, similar to Department of Revenue's Department of Revenue letters. This would be something similar. The BPOA, Bureau of Professional Occupational Affairs, and Department of State oppose the legislation, however. So something we need to keep working on. Corporate tax, on the corporate tax side, as I said early on, everything with regard to taxes is on the table until it's not. And again, some have more support than others, but we operate on the assumption there is going to be a tax bill, and if there is, we want to be part of that discussion. R&D tax credit, not something we normally engage with, but we had an opportunity working with Representative Briggs to make some changes to the program. Representative Briggs's bill, as introduced, would just increase the threshold from 60 million to 120 million, which is, by all indications, is a good idea. But we are looking at broadening the reach of the program, of the reach of the tax credit program, by expanding the definition of what is a small business, and also simplifying the calculation to more closely mirror the federal calculation. So working with Representative Briggs and Senator Ferry and his group on trying to achieve those objectives. And again, I think some positive feedback on that. Tradable net operating loss, NOL legislation by Representative Paul Friel and Jonathan Fritz, bipartisan support, House Bill 1129. This is modeled after the New Jersey program. Some of you may be familiar with it. It would establish a net operating loss transfer program that would permit eligible businesses to sell their NOLs to unrelated parties. As written, the bill only applies to biotech and tech companies. There are a lot of other technical issues. It's a very technically complicated piece of legislation. I think Revenue has some issues with it, but it's out there. And the champions, Friel and Fritz, are two tenacious legislators. So they're not going to let this go without some fight. So we're engaged on this. We're not taking a position at this point. We want to continue to act as a technical resource for all sides. Talked already about CNI rate decrease. Just so you're aware, there are other bills out there. The two bills that are listed would increase or immediately drop the corporate net income tax rate to 4%. I think upon enactment. So it would be immediate drop, no phase in, immediate drop, and combined reporting. Again, the perennial that has been a mainstay since the Rendell years. Usually not a lot happening in the PIT area, but put this out there for your information. Representative Borowitz has a bill that would eliminate the PI personal income tax. Really, it's not going anywhere, but I just wanted you to know that it's out there. I don't know how you would make up. I think the PIT is 10 or $15 billion in general fund revenue. So I don't know where you would make that up, but it's a proposal that's out there. A number of bills already talked that a couple of these found their way into House Bill 1610, but House Bill 1357 permits a deduction for overtime pay for state PIT purposes. 1467 excludes tips and gratuities from the definition of compensation. And House Bill 1514 would establish a refundable tax credit for tip wages. So Some traction on the overtime and the tipped wages, as indicated by the support in House Bill 1610. There is some potential uniformity issues around those. We've mentioned it. We've kind of put that bug into some legislators' ears, but that's out there. Just FYI. Administrative proposals. So a couple of bills at the top here, House Bill 1551 and 1552. These are Department of Revenue initiatives that came out of kind of nowhere, quite frankly. There was no practitioner input on these. And these bills will have a substantial impact on taxpayers and tax practitioners by creating new hurdles for taxpayers seeking a refund for overpaid taxes. So House Bill 1551 provides for the dismissal with prejudice if a sales and use tax refund claim does not meet all the statutory requirements. And House Bill 1552 provides for the assessment of a penalty on taxpayers or practitioners for filing a frivolous refund claim of $5,000 or more. These bills effectively require every transaction in a sales and use tax refund claim to be fully vetted, which, as many of you know, a complete evidence before filing is not always feasible. So a lot of work to do on these bills. A number of groups have come out in opposition. We are opposed, but we continue to try to work with Revenue to try to improve. If there's an issue that Revenue wants to address, it needs to bring in all the practitioner groups to try to address it in a more broadly and uniform approach. Statute of limitation for collection of assessed taxes, Representative Dave Zimmerman, House Bill 1074. This would align Pennsylvania statute of limitation, which is now 10 years, which is an initiative that we worked on with former Rep. Frank Ryan many years ago. There's a 10-year statute of limitation. This would lower it to 7 years to mirror the federal statute of limitation, I believe. And overpayment of state personal income tax. Representative Steele from the Allegheny County area. This provides the Department of Revenue with discretion to grant refunds outside of the normal 3-year refund period. I think this stems from a constituent issue, and Representative Steele is trying to provide taxpayers a little bit more flexibility. Yes. A slide on and state inheritance tax. I put this out there because I always get a question about is the state doing anything with the inheritance tax? And these kind of run the gamut from the elimination of the tax, Representative Gatos's bill, and I think one of Senator Brooks's bills do that. But also there's kind of go in between. One bill would reduce the inheritance tax for lineal descendants. So all over the board. But there's really not much discussion on these bills or the issue. So out there, but not gaining much traction yet. False Claims Act, not something that typically is on our radar. So Pennsylvania does not have a False Claims Act, and the Federal False Claims Act. A number of states surrounding Pennsylvania, do have it. We do not. And False Claims Act is essentially functions as a tool against waste, fraud, and abuse, allowing whistleblowers, private citizens to file what are called TAM lawsuits on the government's behalf, potentially allowing them to receive a portion of the recovered funds. House Bill 1697 would establish a Pennsylvania False Claims Act similar to the federal law. So it essentially provides tools to recover funds lost through waste, fraud, and abuse, which not in and of itself is a bad thing. But 1697, which was very fast-tracked, I think it was introduced on a Thursday and ran out of the House by the following Wednesday. You can see it had bipartisan support. But the business community is very much opposed to this. We are concerned by it as well because a a lot of the State False Claims Act do not include taxes. This one appears to include taxes, and taxes are clearly under the purview of the Department of Revenue. They have all the resources they need through the audit process and what have you, to ferret out any type of fraud or abuse. So that's our concern. Again, the False Claims Act in and of itself is not a problem, but when it goes beyond the core areas, it becomes problematic to the profession. So that's kind of a real quick update on the legislation that's in play. I want to do a real brief recap of the time I have on a couple of regs, and then talk about the judicial elections. So State Board of Accountancy issued their general revision regulations back in July. PICPA commented on August 11th. And the department, BPOA, State Board of Accountancy, responded just last week. Or no, not the State Board of Accountancy. Sorry, the Independent Regulatory Review Commission responded last week to the proposed general revision regulations from the Department of Revenue. And basically, IRC said you should heed PICPA's advice and incorporate changes from Act 27 in 2025. So that's a positive. We're working on with the board now to incorporate the Act 27 changes into the next revisions that will be published. And going back to our earlier discussion about the regulatory process, so the final regs in this for the general revision proposal are not due until I believe August of 2027. Hopefully we can expedite those, but that's kind of the time frame that's allotted by statute. And waiting for licensure by endorsement, the proposed regulation, which is due out this summer. We're already in October, so we're still waiting for that. Department of Revenue regulations. You may have seen some of these. We're still waiting for the sourcing of sales regulation. This is part of the 2013 tax bill. So we're now upwards of a decade into this without a regulation. The department has issued guidance, but no regulations. On business, non-business income regs, they're due out final form. The PICPA provided comments, extensive comments last year. These are due later this year as final form. And personal income tax mode of electronic payments, those are due final later this year. Real quickly, in the time I have, I want to just spend a couple minutes on judicial elections. So the big election is a retention election, which is really essentially a popularity vote. Yes or no, do you want these judges reelected? In my tenure, there's only been one judge who has lost a retention election. There are millions of dollars that are being spent on this from both sides to try to get to return these three judges at the Supreme Court level, Donahue, Dougherty, and Wecht. And there's just as much activity trying to get a no vote on at least one of them. So you'll be, those of you who vote in November, on November 4th, will be asked to retain those judges. So just be aware, do your research. And judicial elections, there are two seats open, one on Commonwealth Court. Judge Stella Tai is a current Philadelphia Court of Common Pleas judge, and Matt Walford is a sole practitioner in the Erie area who specializes in environmental law. One seat open there. At Superior Court, one seat open. Marie Batista is a Republican candidate. She was a candidate in 2023 and lost. She's back. And Judge Brandon Newman is currently a judge on the Washington County Court of Common Pleas. And prior to that, he was a member of the Pennsylvania General Assembly from 2011 to 2017, I believe. So he's been on the court since 2018. PICPA or CPA PAC is doing interviews with the candidates, and we will be providing that, kind of doing like meet and greets, just to kind of allow the candidates to introduce themselves to PICPA members. That information will be out shortly. So we're in the process of conducting interviews as we speak. I'm going to try to do a question or two. hopefully a non-technical. Has PA gathered any current data that supports, demonstrates a continuing windfall resulting from combined reporting? No, not that we have seen. Has anyone projected whether combined reporting would or would not? No. I mean, we have kind of anecdotal information that it's not going to generate the revenues. I think the state of Maryland has also looked at it, probably the best resource. The state of Maryland has looked at this and has basically said it's not worth the juice is not worth the squeeze, something like that. So I know we're running out of time. I apologize. I will take a look at the questions and follow up with any answers, any follow-up questions. I want to thank you all very much for your time this morning. I know we may be a minute or two over. Thank you very much. I just really want to say, the effort that was put forth with regard to House Bill Act 27 is something that we can emulate, and we can be more successful if we work together. And want to just thank everybody who made the calls, letters. We appreciate your effort. We are successful in Harrisburg because of what you bring to the table and your efforts back in the district. So I want to thank you all and enjoy the rest of your Tuesday.